So if we have just the first look on the general overview, there is the CSRD report. It's more pages, more volumic information. So it's, for example, on our panel of about 20 reports in France, the increase of number of pages, if we exclude the audit report, was about 45 million increase compared to last year, which can seem huge. But in fact, what we'd like to highlight this morning is that it's more like a rebalancing of sustainability disclosure compared to finance disclosure. Last year, the majority of reports in France, a sustainability report is within the universal registration document, like the annual report under the prospectus directive. And when we compare the number of pages of finance compared to sustainability, last year there was a huge difference. So sustainability was often very less space in the report compared to finance. And this year we can see that there has been a rebalancing. So we can see that there is a huge increase of pages, but it's also a rebalancing of information between finance and sustainability, which is at the heart of CSRD, that is to have a vision, an integrated vision and an integrated interpretation and understanding of performance, not only finance performance, but also sustainable performance. Business models, there is often some use of incorporation by reference, some linked to other parts of the report. And we have in France a very specificity, which is that a French company use the matrix to present their business model. The matrix that was built or proposed by the IIRC framework, which is integrated reporting framework. And we think that it's quite a good practice to use that to have a visual representation of the business model plus some text, because it can help to people to have a good overview in just one look about how your business model is made. So this IIRC matrix or visual to present the business model is really widespread, because it's more than 60% of the panel. I know that in Netherlands, it's more than short text, no matrix to present, and it would be quite interesting in the next month to see what has been done in the other country to align on our practices to help the reports all over EU to be more comparable. As for the value chain, it's quite the same. In fact, there is a lot of variety, but as well in France and Netherlands, there is a use of a visual to really present in a visual way the upstream, downstream operation. And for example, we can see some visuals that are quite different. For example, the value chain with also the arrow placed on the value chain from a media French company, or also a presentation of the value chain, and also integrated information on the markets and the clients. So it functions like, I say, a table of content with the presentation of the value chain, and then some pages, so that you can go and see more detail on the market and the activities and the supplier and so on. So which is some very good practice, it seems to us. So a high use of visuals for value chain. So the double materiality assessment, I think there is a good practice that emerged, which is to present the IRO through tables. Formerly in France, the simple materiality assessment was presented through GRI matrix. And what we've seen with CSRD is like there is a disapparition or like a decrease of the use of a matrix to present as a materiality, which is like how it is presented. As for the IRO, we note a wide range of IRO in France and in Netherlands. In France, we go from nearly 20 to more than 80 IRO. In Netherlands, from like around 10 to more than 50 IRO. But and there is no sectorial correlation. If you try to see from a sectorial point of view, is there an impact on an alignment on the number of IO depending to the sectors? And the answer is no. The fact is that there is a different understanding of what IROs are this year. And so for some companies, they detailed a lot the risks, the opportunities, the impact. So they have a wide range of number of IROs, whereas some have a more macro perspective of IRO. And so the number is not correlated to impact or risk, but more to the way companies appropriate themselves the concept of IRO. Concerning the negative impact, positive impacts, or risk opportunities, we note that there is mainly more negative impact and risk that are disclosed compared to opportunities and positive impacts. That is to say that what is, let's say, the bad part, negative impact or risk, are huger than the better part, even though there is a quite slightly different difference in Netherlands. If you'd like to add something, Skadi, about that.
Yeah, it's a more balanced situation. Let's say it like this. Or you see that the ESRS or the approach of the DMA is definitely balancing out the situation a little bit for companies, because a lot of companies over-reported on their positive aspects of their companies on sustainability, because companies obviously like focus, and we all want to focus on all the good activities that we're doing, and we want to measure on how effective we are in that. But with an risk analysis in form of a double materiality analysis, we see also more a complete overview of the risks that they are. However, to have like a overview of the IROs that are specific for the company, you see that when you write them all down, that there are a lot of opportunities that a company can focus on and even like improve these like positive activities in there. So I think that is an important thing for companies to also take along and not only focus on the risks moving forward. That I think is an important element to add, Cindy. Yeah.
Yeah, thanks. And totally agree from the French perspective, the fact you, yes, mitigate your risk and seize your opportunity. And opportunity to us, CSRD, by asking companies asking companies to really think about sustainability or opportunity, is a huge tool also to think about the evolution of your business model. What are the key new markets you can open? What are the key new way of consumption that can open new market? And so opportunities are really not the main topics in number, but a really important factor of resilience for company. We can see that for this first year, there is very few significant comments in audit report, as well in France or in Netherlands. What is a huge trend is the major presence of Big Four as auditors. It's something that we see in Netherlands and that we see in France, even though in France there is some of the companies that choose auditors that are not Big Four, but it's really a minority. And also what we see in France is that half of the panel that had formerly just one audit firm choose to have this year for the first report 2 audit firms. So it's yes, a big trend, and it would be interesting to see if it's develop in France and in other countries to choose to have 2 auditors, 2 audit firms instead of one to cover the CSRD statements. As for the conclusion of the auditors, there is all reports, all audit reports are signed in France except one, with at least one observation. That is that the observation of in the audit report is a way for auditors to say, please note this this information, have a look at it in the report, because I think it's like important for you reader to have a look, more precise look at this part of the report. And in fact, it's quite a common observation. It's the main observation this year is about the methodology of the report, and highlight from auditors that it is the first year of reporting and that there is still some uncertainties. There is still some question of perimeters that are not totally covered. So in fact, most auditors just say to the reader of the report, please have a look at the methodological part, and you will find some information of the limitation of the first report. Do you see the same thing in the Netherlands, Kadi?
Yes, definitely. What we also see is that during the process of creating or going through the CSRD steps, the ESG reporting steps, is definitely that auditors are quite nitty-gritty, let's say it like this. They're like having quite detailed questions about the approach, who made the choices in which step of the approach. We see definitely that the double materiality analysis is like audited quite thorough, so that we know really on how, or that the companies really know on how to move forward. So that is a good base. But then actually with the limited assurance also later in like the auditing, when they have been taken along in that process with the company, that they are a little bit easier on like the audit itself, but only if you have taken them along. That is what we definitely saw as well. Yeah. I think on this part, I think the teams did an amazing job, like creating the benchmarking. I think it's interesting for companies that are present to have a look also, like what does that mean for you? Also, if you are interested where you're standing on the benchmarking that we did, please contact Cindy, Simona, or me for the representative countries, so that we can also give you a more detailed insight on also sectors that you are in and what does that actually mean for you, and we can give you also more a detailed view on that. I think that concludes our benchmarking part. Let's jump into the strategic outlook. To be honest, also why CSRD and the CSRD reporting started was to really integrate the financial aspects of reporting with the sustainability activities of a company and to give them more structure. With this omnibus comes a very new possibility for companies, again, to really have more efficient capital allocation. So to have like less capital to do all the like qualitative writing elements and administration work on there, but a little bit less on really allocating that capital to the right causes and also to the right risk mitigation elements in there. Another aspect definitely is to have a stronger loyalty or attractiveness as an employer, because it definitely gives a competitiveness edge for companies. What we definitely see is that now the wave one companies are asked obviously to report, and they will ask on the wave two and other wave three companies to provide information, even though it is asked from them to only ask for information on the voluntary standards. It's still is their choice to use and choose their vendors and their service providers. So if a company is not able to give information on the data points that the Wave 1 companies want to have information on, they still can choose for a different company. And that also means really to have still a strong focus on your sustainability steps. So still the image and brand strength of your next steps and really driving this competitive force forward in going on with your ESG reporting and ESG strategy is very important in there. So I think that sums up a little bit also the strength and focus on sustainability aspects and really the shift of the omnibus changes in there. But Cindy, can you walk us a little bit more through the strategic outlooks that we summarized?
Yes, thanks, Kadi. And maybe what we think that there is two categories of companies: the companies on the first waves that have already published, or the company of the waves 2 that have already done their double materiality assessment or gap analysis, and the companies that have not launched their project yet, and that will be under CSRD anyway. So we maybe can go to the next slides and have a look at the first category. That would be the companies that are under Wave 1 or that have already done their double materiality assessment or gap analysis. For example, company of Wave 2 or 3 that have already launched the CSRD project. Our conviction is to keep going, not stop what you have done, because as said by Skadi, it's not only for CSRD or the job you've done, it's for all the reasons that Skadi presented to you just before. So to us, it's really base your work on your double materiality assessment and prioritize. Deploy the most impactful policies and the most prioritized matters based on your double materiality assessment. Also, work on the opportunity. As we mentioned before, there is opportunity as not the main part of the impact risk of opportunity material that results from the double materiality assessment. Nevertheless, they are crucial for the resilience of your company, and often they are not really taken into account by your clients, that focus more on impact and on risk. And please, maybe don't forget to work on your opportunities. Another point important is to strengthen your reporting operating model, the soundness of your ESG data. As said by Skadi, even whatever arrive to CSRD because of the omnibus, you will have to report on sustainability anyway. So the importance of having a sound report process, a sound data collection process, if you can automatize your process, it's also really important because you all know that sometimes a fake information, wrong information can be very damageful for companies. For the more mature company, do not forget to build your operational steering model, because reporting is seeing what has been done before, but it's quite important to have also the perspective and to follow if your trajectory is effectively on track or not, and to adapt if it's not on track. If we go to the other type of company, that would be the company of wave wave 2 or 3 that have not already begun their project. And maybe we can go on next slide. Thanks a lot. Our advice would be launch the first step of CSRD, but focus on what is really essential to build your CSR roadmap or to strengthen your CSR roadmap. First, realize your double materiality assessment. Lots of companies within Europe used formally the simple materiality assessment, which is totally voluntary. So whatever your position, you can use now the new framework, the double materiality assessment. That is a really important tool to assess how sustainability can impact your activity and your impacts of sustainability. Build or strengthen your CSR strategic roadmap and organization based on the double materiality assessment. And then, of course, also strengthen your ESG data management, because by the end, to follow your roadmap, your CSR roadmap, your compliance roadmap, you will need data. And we know that data is a huge work for companies, whatever it is CSRD or not. It's quite complex data when we go to ESG data.